Hello, everyone. My guest today is David Kimmerer. He's the co-founder and CEO of CryptoTrader.tax, a tax reporting platform built to give cryptocurrency investors an easy, automatic way of staying compliant with their cryptocurrency transactions. He's also built partnerships with industry giants like Intuit TurboTax to bring crypto tax reporting into the mainstream. David, you ready to take us to the top?
Let's do it.
Are you one of these guys that got into Bitcoin in 2010 and you're filthy rich now and now need to deal with tax problems?
No, I wish. No, I didn't get into it until kind of late 2017 when really all the hype was happening. So I'm pretty late compared to some of my peers.
So help me understand the actual problem here. Do people have problem paying taxes or understanding how to pay tax on their crypto gains?
No, the problem is calculating your capital gains and losses for it because everything's quoted on these cryptocurrency exchanges in cryptocurrency denominations, right? It just becomes hard because you have to report on US dollar values. So, right, I would need to know, what the US dollar value of Ethereum on July 17th, 2017 was, when that information is very difficult to come by. And then you layer on, some people are trading thousands, hundreds of times, right? And it just becomes difficult to do those capital gains and losses calculations. So that's what we automate.
Can't you, I have most of my money with a family office, and one of the things they do for me is make sure to take losses when they appear and then mitigate the gains to minimize tax exposure. With the volatility of crypto, what regulates at what point in time you actually take and convert the dollar amount? Because if you're smart, you could essentially take a lot of losses, basically carry forward a loss and not pay taxes.
Right. Yeah, it just all depends on taxable events, right? And in crypto to crypto trades, which is very common, right? If I'm going from Bitcoin into Ethereum, that triggers a taxable event, which, right, would realize a loss. And this is another part of the problem, right? Is for all these crypto to crypto trades that, thousands and thousands of traders are trading on Binance and other giant cryptocurrency exchanges.
Coinbase.
Every time they trade one asset for another, even if it has nothing to do with trading out to fiat currency, you trigger a taxable event, which needs to be reported on Form 8949. And so in the world of stock trading, which is what you could compare this to, your broker will give you a 1099-B at the end of the year that details every single taxable transaction. Now, these exchanges like Coinbase and Binance and Bittrex, they don't have this ability because of the transferable nature of these digital assets, right? People can send them into Coinbase from their wallet. They can send them from Coinbase to Binance, right? And it just becomes this huge mess. And tracking that turns into a nightmare. And so that's where our solution really ties in. And it is kind of hard to grasp, but we just automate the whole process.
Well, one of the whole things with crypto is it's decentralized and it's not tied to any government. So why does the American government feel like you should have to pay tax on it? Couldn't someone just argue this has nothing to do with, it wasn't in America, it's not American, I don't know American government taxes?
Yeah, that's one flavor of cryptocurrency, right? And I'd argue that it's becoming much more the opposite, where it is becoming a legitimate asset class that, know your customer rules are very much enforced at the exchange level. So the governments actually do know the people who are transacting in cryptocurrency. And, it is being treated as an investment. So, if I invest $1,000 into Bitcoin, I'm doing that because I'm expecting to see a return of X amount on my money. So
how do they know though? How does the government know? That's the whole thing about crypto, right? Is you're basically a big, long numeric and, alphanumeric chain of characters.
Yep. Yeah, it's a good question. And so they know because of the exchanges. So to be an exchange operating in the United States, you need to go through know your customer. So you would have to upload your driver's license to even have a Coinbase account. And so if you meet certain thresholds, let's say you trade more than 200 times and you have more than $20,000 worth of total trading volume, Coinbase sends a 1099-K to the IRS alerting them.
They
have to by law, correct.
If the license I uploaded from my Coinbase account is in America.
Correct.
Interesting. So won't people just start using things that are not Coinbase, people that don't have a relationship with the US government?
Yeah, that's a huge thing. And it's sad because, you have to be very careful when you're regulating. And, I've been to a lot of these types of conferences, but it's pushing very innovative companies to leave the United States and to blacklist the United States. And that's dangerous because, you want this next gen finance movement being built in the US, right? That's very important. And so you have to be very careful with how you regulate to, attract those companies because it's very easy to say, oh, Bitcoin's used for money laundering and criminal activity, but it's like not true. It's very much becoming, with Facebook getting involved in all these things, the industry is getting legitimized. And, if the United States, doesn't regulate in a smart way, it could completely miss out on this new wave of, entrepreneurship. And
well, that's the whole point, right? Is like the reason crypto was invented is because basically the people with governments are dumb and they shouldn't regulate finance and they shouldn't own the currency at all. So why doesn't the government just stay out of it? Why try and take tax on something that could be the future of finance?
Yeah, I mean, it's a hard question to answer, and you'd get so many different answers across everyone you talk to in the space. But I don't think anytime in the short term, government's going to be completely irrelevant. So I more take the approach that cryptocurrency is going to allow much more frictionless transactions. It's going to reduce the friction in capital markets. And I think government needs to play a role in that, especially in the short term.
Yeah. All right. Tell me how you make money on this thing.
Sure. So we just charge a flat fee. It's the exact same business model as TurboTax, if people are familiar. But if you're a trader of cryptocurrencies and you just want to pain-free get your tax reports done for it, you just upload your stuff into our software platform, and then we'll generate the necessary reports that you need to stay compliant. And then it's a one-time fee for that.
So is it like a SaaS business, basically?
It is a SaaS business, but the time frame is more yearly, right? Monthly doesn't apply to us because it's just people need to do this every year.
So what do they pay on average per year to use you?
It depends on the volume of the trades that they carry out. But they'll pay anywhere from $50 to $200 per report.
Okay, and how many on a customer? How many reports do they do per year?
So I guess that was a little misleading. A report includes everything. So yeah, they're paying anywhere from $50 to $200
a year.
Correct.
Okay, got it. So I guess the next question to you is how do you measure your success? I'll take a stab at it by asking a metric question. Over the last 12 months or last year, whenever the last filing kind of sequence was, how much all the reports you generated, they covered how much total kind of crypto trading spend in fee in American US dollars?
Rephrase. Are you saying like everyone who's filing taxes
with you?
Like how many are we capturing?
Yeah, through you.
Oh, a small percent. Like there's so many people.
What's the amount though? Like 1 million or 100 million or a billion?
Of people that are paying taxes or traders?
No, people that used you, you did their taxes. And what's the dollar amount of the taxes you essentially helped them pay on?
So the number of people, so we have just under 10,000 paying customers from this past tax year.
Okay.
And so, between like
representing how much GMV basically, right? Like how much transaction, like how many, do you see what I'm saying? Like,
yeah, well, we've processed over $1 billion of cryptocurrency through our tax engine. I don't know if that answers your question.
That's what I'm going at.
Yep.
It's like if you filed my personal tax return and my taxable income, I'm making this up, was $1 million and you did 100 of those, your answer would be, we processed 100 million through our platform.
Right. Yeah.
So that number for you is $1 billion.
I could go pull this from our database, but it's a massive number. Like I think it's over 5 billion at this point.
Okay, good. I mean, well, that tells me then this is a real problem. You're onto something, and that's interesting. So, how did you land on this, on this pricing model? Right. So, 10,000 people at obviously, paying you
under 10,000. So it's around 7,000.
Okay, so let's say 7,000 though, paying kind of a minimum of 50. That brings in you $350,000 last year. Is that about right?
A little more than that, but yeah, we changed our pricing model too. We were charging way too little for our product. We started with just a $40 flat rate, no matter what volume. And then 2/3 through the tax season, we switched it to volume based. So depending on how many trades you have, right? Because that's when it gets more difficult. So like we're more valuable for these high volume traders. But so yeah, now we're on the model of anywhere $50 to $200. But yeah, so in 2019, we'll do, around $425,000.
Okay. And what is are there, obviously, so my whole thing whenever I talk to an entrepreneur is I want to figure out like how they can make more money. If they found a real problem, if they make more money, you can build an even better solution, right? So totally. This is a very capitalist question, but like, how do you change pricing axes, what you price against to make more money so you can invest more in this problem?
I don't think our pricing is the big opportunity to make more money. Going deeper in the current market, there's, first of all, the market's growing at an insanely fast pace. And then two, it's still, like you said, the majority of people who use cryptocurrencies they don't pay taxes on it. Now that's going to change as, the IRS is starting to put together a task force, whether you like it or not. But, let's say 10% of the market file taxes. Well, I'd argue that will grow to 50% over the next few years of the people who trade, right, in cryptocurrency. So right there, the market's growing, 5x. And then on top of that, there's just opportunities to go deeper, to do business development type stuff, form partnerships with similar companies. And so that's what we're really focused on.
Yeah. A lot of these, like if you compare this to traditional finance, where these kinds of companies start to make like millions and millions of dollars, like for on their big accounts, is they're doing like real time tax loss harvesting, right? Versus just like a one-time flashpoint tax report at the end of the year. Is that analogous to crypto? Can you do like real time tax loss harvesting?
Yes. Yeah, that's very big. And that's something that's on our product roadmap. It's pretty easy with the data that we collect, right? We can see, hey, we see that right now you have a great opportunity to even just trade into another cryptocurrency and trade back, because right now wash sale rules don't actually apply to cryptocurrency because it's treated as property and not as a security like a stock would be. So there's great opportunities for us to educate people and to provide them a service year round, being like, hey, now you should sell, thinking about like the Betterment type of sales book. But yeah, great opportunities to build products in that space too.
That's interesting. And then on your pricing, you have hobbyist, pro trader, high volume trader, and you quantify it based off number of trades. Why is that the right utility metric to price around versus the actual dollar fiat like conversion amount?
Yeah, so it's because of, if you think about it, right, we want to price based on the value we're providing, right? Because that's what people are willing to pay for. And so to do this by hand, right? If I had 10 trades, I could do this by hand. It's not too hard. So, we don't want to charge as much for those types of people. But for the people who have thousands and thousands of trades, there's just no way they could ever possibly do this. So we're providing them so much more value to use our service. And so that's why they pay more, because it's more valuable to them. We found it is the right metric. We experimented a good amount, and it's the best way to go.
Yeah. When did you launch the company? What year?
So mid to late 2017, we launched, and then we got an MVP out in 2018, that spring, that first tax season, but we didn't charge for it then.
How much did you spend to get the MVP up before your first dollar revenue?
We're completely bootstrapped, so I think it's maybe $2,000.
Just your own money, basically?
Yeah, exactly.
Are you a developer?
I am not, but both of my partners are full stack developers. They're great guys, and we work very well together.
How many folks in the company today?
So right now it's just us founders. We've also contracted out a decent amount of work, but we're hiring right now. So, if anyone in your audience is a software engineer and is looking for a job, we're hiring.
There you go. All right. So 3 of you guys, it's great. And bootstrapped to date. Are you burning capital today, or are you guys cash flow positive?
No, we're very cash flow positive, but we're reinvesting just everything back into growth.
Yeah, I was about to say, if you're cranking in, call it 350,000 last year across 3 people and throwing some contract work, I imagine you guys are, doing nicely there. Talk to me about churn. I don't know if you have enough history to look at this, but of all the people that processed with you, 18 months ago, 4 months ago at their 12-month mark, did they all renew, or how many people did them with you once and then didn't do them the next year?
Yeah, so we really don't have enough data for that right now, because in 2018, it was, a crap MVP just to test the market. Let's see if there's actually demand for a product like this. And then we really doubled down, built a very legit product going into this past spring. So really this past spring is our first year that we've been, very legit and doing things the right way. So it'll be interesting to see, like you said, what our churn will be. I would imagine it'll be anywhere from 20% maybe. But the thing is, if we treat our customers well, which has been going very well so far, they're always like, oh, we'll use you guys again next year. It's more, the churn will happen if they stop trading cryptocurrencies. You know what I mean?
Yeah.
So it's very market dependent, right? That's huge what we're built on, and we're very bullish on where this market will go. You see all the investment and talent, venture capital being poured into this industry. It's exciting. But I'll have to get back to you, I guess, on the legit churn.
How do you convince these folks to trust you? Again, the big reason people use crypto is to stay anonymous. Obviously, if you're doing their taxes, you now know who they are, and you know their volume, you know their moves and everything. How do you convince these, highly skeptical market to trust you?
Yeah, great question. So, and this will bring a little bit more clarity to what we do. So they don't have to trust us. The only thing we need from them is an email address. They could even put in, a phony email address. And we're just a tool for them to generate, this specific type of report. And then they'd go and upload that report into TurboTax. And that's where that partnership came in. And TurboTax is the one that collects Social Security, identifying information, where they just use us as a tool to build out their capital gains, capital losses, a few other things. And then they can go bring that report to their
So they're only giving you that alphanumeric, basically their alphanumeric code.
They're only giving us an email address, and then obviously they're trading information, but that's not tied to anything, right? It's not tied to an identity.
What's the trading information though?
So we integrate with all of the major exchanges, wallets, other platforms. And then they through an API key, right? They give us their API key. We suck in with read-only access, and we can pull in all of their trading history across all of their exchanges.
I see. Okay. What was it costing you fully weighted to get a new $50 a year customer?
I don't even know off the top of my head.
I mean, do you guys spend money on ads or anything?
Yeah. So like our AdWords spend is positive. Like it's greater than one. This past spring, we probably spent like just over $17,000 with AdWords.
What do you mean greater than one?
Like for every dollar we spend, we make, $1.15 with AdWords.
Okay.
So it's like a positive, it's a positive feedback loop there.
That would mean basically like an 8-month payback period then, right? If you spend, I know I'm asking you, if you spend $50, you're going to get basically $70 back out of it.
Correct.
Yeah. Okay.
That's just on the one traction channel. But yeah. Yep.
Okay. And then, so that's helpful. Is that unlimited? Like, can you spend $1 billion in that channel and you think the economics will hold?
Nope. No, there's only a certain volume of people searching these keywords, during tax season, but we buy them all up, and we really didn't start doing a good job of that until kind of halfway through tax season. So we'll again, big opportunity for us to double down on that.
Any plans to raise?
Yeah. So we will probably raise around after next tax season. It's still in the air. A lot of companies in this space, they did a raise during 2017, kind of the boom. And that was a mistake because, they're taking on this money and then all of a sudden they don't have the traction revenue to support like a Series A, right, or a Series B. And so those companies are laying off people. So you do have to be very strategic when you raise because you don't want to get ahead of the market. We believe the market can become very, very substantial, but you have to time it right? So that's important to us.
So if you did raise, what do you think the right amount is?
Yeah, I think, obviously it depends, but I think a modest, somewhere between 500,000 to $1 million type of seed would allow us to hire, 3 to 4 more engineers. We need to bring on some more customers, support people, and then just keep growing. We want to grow smart. We want to grow slowly, but like fast at the same time.
Yeah. What would you hope to raise valuation wise at? You're talking like 3, 4, 5 million pre-money?
I think we would raise on a convertible note. I don't want to slap a valuation on it this early,
So what cap would you go at then? You're obviously speculating, but I'm just curious what would make you happy.
I'd say like a 5.
Yeah. 5. Yeah. That seems to make sense. We'll see. Very cool. All right. And then name 1 or 2 of your competitors. Is there anyone else in the space?
Yeah. I mean, they're not as user friendly, but like Bitcoin.tax has been around for longer. Cointracking.info, again, been around for longer. But, we're very focused on building the best product in the space.
Yeah. Does it make sense to like go buy them just to take all their customers and then, use your own tech?
Honestly, I've thought about that many times. Like down the road, I would love to buy Bitcoin.tax.
Yeah. Have they raised capital?
No, those 2 are each bootstraps. There's a couple more that have raised some venture. So we'll see. It's very much a market share grab right now.
We should talk about me getting you capital to go do that. We can talk offline about it.
I'd love to.
That'd be interesting.
That'd be fun.
All right, man.
It's going to be big.
Yeah, let's wrap up. I'm in, by the way, full disclosure, I'm in Bitcoin. I own a lot of Bitcoin. I think it's great. It's interesting. I don't think a ton about it. I just buy a bunch when it's cheap and hold it. And then I interview all the people in the space and learn a lot. So that's
exactly. I love that.
Yeah. I'm just like, suck it up. Learn. All right.
It's a good way to do it.
Yeah. All right. Let's wrap up with the famous 5. Number 1, what's your favorite business book?
Traction by Gabriel Weinberg.
Yep. Number 2, is there a CEO you're following or studying?
I like Stuart Butterfield.
Yep. Number 3, what's your favorite online tool for building the company?
Intercom, no question. That changed our business.
Number 4, how many hours of sleep do you get every night?
I go to sleep 7.
That's good. And how old are you?
I'm 24.
24. And situation, I'm going to assume single and no kids.
I am single with no kids.
All right, good. And last question. Take us back 4 years. What do you wish your 20-year-old self knew?
I wish I would have known how big of a deal Bitcoin was going to be.
Guys, there you have it. 7,000 Bitcoin traders and folks in crypto use them to process taxes. They made $350,000 over the past 12 months doing, again, those tax returns for them. Launched in 2017. They are bootstrapped, which I love. Spent $2K to build their MVP. Now they're profitable. Team size of 3 people. No churn too early. They're spending $1, get a new $1.15 in terms of CAC and payback period and ratios there. Looking to scale, maybe raising, call it 500 to $1 million sometime here in the near future to hire some more engineers and customer success folks. But in the meantime, again, just scaling in the market organically and getting the timing right. David, thanks for taking us to the top.
Thanks, Nathan.